225 basis point reduction in interest rates and policy rate from the State Bank of Pakistan. However, there has been very happening market in the public debt securities market, where in some tenors, particularly in 10-year, there has been an adjustment of more than 500 basis points in the yields of the government securities from the peak levels we have seen during the year. So this has a lot has been happening, and market has been anticipating a lot of things, lot of monetary easing to come nowadays as well. And in the current scenario of COVID-19, which has implications or for public finances as well, for overall economic management, we thought it would be a very important event for us to have an update, an updated view from our DG Debt about the outlook on those lines. So now, without further taking time, I would be requesting Mr. Varaj to start the session. Before that, I just quickly mention that the format of session is that we have a 30 minutes presentation by Mr. Varaj, which would be followed by Q&A. And for the Q&A, you would be able to post questions through the chat box, and we'll try to pick them up as they come through after this session. So Mr. Varaj, thank you very much. I'll hand over now the session to you. Thank you. Varaj, you have to unmute yourself from the mic.
I have done that. Thank you so very much, Mr. Asim, and all the distinguished participants. I really don't have the words to thank the CFA Society for making this interaction possible, and to all of you for making time for this discussion. The Ministry of Finance is now determined to reach out to all of you, the participants in the financial markets on a regular basis, and we believe that your input and your feedback is extremely valuable for us in improving the way we are doing things and in filling the gaps and to improve our debt management operations. So thanks a lot for making time for this event. I have divided this presentation into 4 sections.
Varaj, I think my presentation is up and good for your review and audience review.
Okay. You can go to the next slide, please. So the presentation has 4 parts. First of all, I would like to explain how the borrowing plan for the current financial year has progressed, how much has been borrowed and how much is left. So that will give you an idea of the fiscal deficit levels that we are looking at and how we plan to finance it. After that, I would like to spend some time on our strategic targets over the medium term. There are 2 parts to it: the overall strategic targets and those relating to government securities in particular. Then I will talk a little bit about the new borrowing instruments that are in the offing that we believe were missing from the portfolio of the government. And once these instruments are added, it will provide more depth to the borrowing operations in the domestic markets. And finally, a little bit of discussion about the debt management reforms that are taking place at the Ministry of Finance and what you can expect over the next few months. So first of all, the borrowing plan for the current financial year, what has been the progress? I have prepared 2 slides. The first one is the overall borrowing plan for the year, and the second one focuses on the borrowing operations from domestic government securities, because I believe that is the area where most of you have greater interest. So let's move to the next slide. Uh, the previous one, please. Yes. So when the year began, we were looking at a federal fiscal deficit of 3,600 billion. As the year progressed, we were reviewing our projections, and until 2 months ago, we felt that the actual federal deficit would end up somewhere in the range of 32 to 3,300 billion. The reason was some unexpected revenues from the central bank. At the beginning of the year, the central bank profit that had been projected was much lower compared to the actual profits that we saw during the first 2 quarters. Uh, and we were also realizing that the actual interest expenditure during this year would also be lower. But after the recent events of the past 1 or 2 months, as a result of the economic shutdown because of the virus, and as a result, an increase in expenditures and an even bigger shortfall in FBR's revenues, has again pushed our fiscal deficit estimates in the range of 3,700 billion. The good thing is that we were slightly aggressive in executing our borrowing decisions. So during the first 9 months, we had borrowed significant amounts already. So this change in target, go back to the previous slide, please. So this change in target has not put too much pressure on us. During this year, we're looking at 1,200 billion from privatization and external grants and loans. At the beginning of the year, this number was much higher. And the domestic borrowing number was much less. If you remember the last presentation that I made a few months ago, these numbers were almost reverse. We were expecting 2/3 from external sources and only 1/3 from domestic. But I must admit that many of the external inflows did not materialize as we had initially expected. We were not able to launch the Eurobond program, which was expected to raise 3 billion US dollars. And the friendly countries deposits that we expected would be converted into public debt. That has not materialized so far, although those deposits have been rolled over. But their conversion into public debt has not materialized so far. We hope it will happen during the next financial year. But for now, our domestic borrowing needs obviously increased significantly during the current year. So now we're looking at raising close to 2,500 billion from the domestic market, of which 200 billion is expected from national savings, and the remaining will be raised from government securities. Next slide, please. So if you look at the government securities, a simple bifurcation can be made between the short-term and the long-term instruments. We are expecting 100 billion from a combination of Pakistan through T-bills, and about 1,150 billion from PIBs. I have rounded off the numbers, so these numbers may not be precise to the last digit, but I deliberately rounded them off just for the ease of discussion. We have not been able to issue sukuk so far, but now, fortunately, the approval for sukuk is in place. The cabinet has approved it. We have included sukuk in our auction calendar for the last quarter. So hopefully we'll have the first sukuk auction after quite some time during this month. Uh, so as you can see, we have already borrowed close to 1950 billion from the domestic market. Uh, and for the rest of the financial year, we don't expect to raise any more funds from treasury bills. We foresee there will be a net retirement actually uh, of around 200 billion. Uh, we we are targeting to raise close to 400 billion from PIBs and 150 from Sukuk. So if things go as planned and our deficit stays in the range where we are currently projecting it to be, we feel that the debt office is in a comfortable position to meet the borrowing needs for this quarter. Uh, so that's pretty much a summary of where we are and at this point and where we expect to end up by the end of the financial year. Next slide, please. A little bit about the medium term targets. We are in the process of revising our medium term debt strategy, which is revised every 3 years. So the previous one was issued back in 2016 and 17. So now the strategy is up for renewal, and we will, in the next few slides, discuss the overall targets and the targets specifically with reference to the government securities portfolio, because that's the portion that you guys, most of you, are interested in. And finally, a little bit of discussion about the debt sustainability path that we would want the government to follow over the next few years, considering that the debt to GDP ratio has become quite high lately. Next slide, please. So this is a summary of the medium-term strategic targets. I would like to caution that this strategy has not yet been approved by the Finance Secretary or the Cabinet, but these are the tentative targets we have in mind. And once the macro fiscal projections are revised, which the budget wing is in the process of revising with the help of IMF, uh, only then the medium-term targets will be finalized. But these are the tentative targets that we have in mind, so I thought it would be best to share with you. First of all, the share of external debt in total debt. The debt office has been concerned lately that this proportion has become rather high. Right now, it stands around 35% of total. Although the debt office would want it to be a lower proportion, but over the next few years, our external financing needs are going to be quite high. And within the fiscal constraints that we foresee right now, we think that maintaining the share of external debt below 40% of total is itself going to be a challenge, because the external debt as a portion has been on the rise in recent years. So hopefully we will be able to contain it below 40% over the next few down in future. Next is the refinancing risk, which has 3 or 4 measures. The debt maturing in 1 year is typically an important, I would say, number to judge the liquidity situation of the government. So we're looking at a maximum of 40% for domestic. This number used to be very high until last year. But now the proportion of treasury bills is has come down in the overall debt. So we hope to keep it below 40% over the next 3 years. External debt profile of our country is relatively better. Uh, so we don't see a very big challenge here. Although our long-term strategic target is to bring it to 15%, but for the next 3 years, the maximum, the ceiling that we have set for ourselves is 20% of the total. So not more than 20% of the total external debt should be maturing in 1 year. The average time to maturity of domestic debt, we have decided to put a floor here because longer maturities are very important for successful debt management. We have realized it the hard way. Right now, our average maturity of domestic is around 4 years. Uh, but with the current distribution of domestic borrowing instruments, we feel it's very difficult to lengthen the domestic maturity profile beyond 4 years. But we are determined not to let this existing maturity profile shrink. So we have set a minimum level of 3.5 years. But to be honest, despite issuing a lot of bonds during the current financial year, we feel that the debt office is still struggling to maintain the average maturity of 4 years. Uh, the average maturity of external debt is relatively much better. It stands at around 7 years right now, and we want to have a floor of 7 years. So we are planning to enhance it further. The medium-term target that we have set for ourselves is 7.5 years. Um, so our strategy will be to continue to borrow more from the multilateral institutions for very long maturities so that we are able to maintain this profile. If you look at the interest rate risk indicators, the domestic debt whose and we are determined not to let it increase any further. The external debt refixing, we have a ceiling of 45% now, and the average time to refixing, the ATR, for domestic debt, it's quite low, but now we want to have a floor of 1.5, and we want the average time to refixing to be higher. For that, we need to issue more and more long-term debt. And similarly, ATR for external debt, we want 5 years to be a minimum. So we want to raise more debt at fixed rates so that uh, the interest rates are not refixed very frequently. The share of Sharia compliant instruments in the overall domestic debt portfolio, it is almost negligible right now, close to 1%. But now we're determined to increase it to at least 30%, 10% over the next 3 years, which will not be an easy task considering that the government securities portfolio is already in the range of 20 trillion. And the Sharia compliant instruments are, I think, outstanding debt, Sharia compliant debt is around 250 billion only, which is just 1%. So going from 1 to 10% over the next 3 years won't be easy, but we are determined to try our best to do that. And then the share of fixed rate debt in the government securities portfolio. Right now, it stands at around 27 or 28%. So we are determined to increase it further. We are targeting a proportion of 35%. So these are some of the key overall strategic targets that we hope to achieve over the next 3 years or so. Next slide, please. These are the targets that relate in particular to the government securities portfolio, which I'm assuming is your area of interest. When we started this financial year, most of the numbers actually looked quite impressive thanks to the reprofiling of the central bank debt, whereby we converted the short-term T-bills into longer-term instruments. So T-bills stood at 35% at the beginning of the year, and the proportion is the same as of now. They're still 35% of the total. Long-term bonds stood at 65 and are still 65% of the total. In the last column, you can see our strategic targets. So going forward, we need to issue relatively larger quantities of bonds so that at least 70% of the government securities belong in this category. If you look at fixed versus floating rate instruments, the fixed rate debt stood at 27% at the beginning. It is still at almost the same level. And this is where we need to work very hard going forward. But now that interest rates have normalized a little bit, we are hoping to issue more fixed rate debt over the next few years, and we are confident that this ratio is going to increase significantly over the next few years. And finally, conventional versus Islamic. So far, we were unable to issue any. I think the target in the last column is slightly out of line with the number that I shared with you in the previous slide. Actually, our target for Islamic is right now 10%. So I need to, my apologies for this mistake. We initially wanted to set this target at 30%, but then we realized it is not going to be very easy to issue a lot of Sharia compliant debt. So we lately rationalized this target to 10%. The average time to maturity, although we would want it to be 5 years, but as I explained to you, we right now stand at 4 years and we are struggling to even maintain it because currently our instruments are tilted towards shorter maturities. Next slide, please. So a few words about the debt sustainability path. We discussed it a little bit in our previous session also. We need to achieve a favorable debt dynamic. That's very critical for us now that our debt to GDP ratio is already very high. It stood at around 85% at the beginning of the current financial year. And favorable debt dynamics simply means that your debt is growing at a slower rate than your GDP. So assuming your primary account is in balance, there is neither a primary surplus nor a primary deficit. The only thing that is going to increase your debt is your interest cost. So your interest rate is like a rate at which your debt grows. And if your GDP is growing at a faster rate, your debt to GDP ratio can go down. So this is important to have a lower cost of debt relative to the GDP growth rate. And the next important uh, part of the strategy, of course, is to generate primary surpluses going forward. The IMF is also very strongly pushing that the government should target primary surpluses in future, because when your debt levels are too high, then you need to generate primary surpluses in order to either retire some of the debt or at least uh, pay a portion of the interest payments out of your primary surpluses so that your debt grows at an even slower rate. Next, of course, is exchange rate stability. Exchange rate is like a double-edged sword. If your currency appreciates too much, by which I mean in real terms, that can create a false sense of comfort that our debt levels are too low, but it's partly because your currency is overvalued. But on the flip side, if your currency experiences very large real depreciation, that can actually increase your debt burden very quickly. So neither of the two scenarios is very desirable. We would want the exchange rate to remain close to its fair value going forward. And of course, the target debt to GDP ratio is 60% over the long run. We stand at 85% right now, and we need all of these factors listed above to work in our favor if we want to bring it down to 60%. As per our current projections, we do expect that debt to GDP ratio will come down over the next 5 years. Um, Before the recent crisis happened, because of this virus, we were quite confident that by the end of the next 4 or 5 financial years, our debt to GDP ratio would be in the range of 70 to 75%. But I think we now need to review those numbers, although I'm still confident that the debt to GDP ratio is going to come down. But we need to update our numbers in order to have a better estimate of that. Maybe in our next interaction, we can talk about that in more detail. Next slide, please. So these are some of the new borrowing instruments that are in the offing. The government used to issue the 15-year regular PIB, but it was discontinued for some reason a few years ago, partly because there was not enough interest in the market for this instrument. And at that time, there were too many PIBs being issued. There was a 7-year issue also, a 30-year issue also. But as I told you, we want to have longer maturities for domestic debt, and we feel that the current instruments are tilted towards shorter term. We have T-bills, a variety of T-bills, and then a 3-year PIB, and then some debt is raised through 5 and 10-year PIBs, but it's not enough. So we need to be issuing more 5 and 10-year, and we want to be issuing 15 and 20-year also. I think, one of the recent auctions, we did pick up a small amount in the 20-year PIB. And now we are relaunching the 15-year PIB. I think in April, it will be up for investment by the market participants. So we are hoping that as the situation normalizes, the market will show more interest in longer term instruments. We were also of the opinion that we need some floating rate bonds with medium term maturities like 3 and 5 years. And secondly, we wanted to have an instrument which offered quarterly coupons because, as I told you in my last interaction also, when interest rates are on the rise, the only instrument that the market is interested in is the 3 month treasury bill. And in the next upcycle of interest rates, whenever that happens, we don't want it to be the case. We want that the market has more options. If the market does not want to assume interest rate risk, there should be instruments available which can offer quarterly payments, just like a 3 month treasury bill, but which have longer maturities. So that the government doesn't have to go out every few weeks and raise very large quantities of debt in the 3 month treasury bill. So we are hoping that this instrument will be in place. I think it is already gone for the cabinet approval. We are hoping it will be granted very soon. And this should be in place either before the next financial year or by the start of the next financial year. Zero coupon bonds is something we have been looking at, and we feel that in the next phase, we should introduce zero coupon bonds also. There are certain segments in the market which have a preference for such instruments. So we will definitely be introducing zero coupon bonds in future. Uh, the 5 year floating rate Sukuk is about to be offered from this quarter onwards. So we're going to have a series of auctions, providing the opportunity to Sharia compliant investors to invest in this instrument. And by that time, this issue is exhausted, we are hoping to build a pipeline of more sukuks. So the plan is to have regular issuance of sukuk over the next 3 years. Our preferred maturity is 5 years, but if we are able to bring a number of issues, then of course we would want that some of the sukuk should have 3 or 10 year maturities also. Next slide, please. And finally, a few words about the debt management reforms. Although these are not final, these have not been notified, but these are in progress, and we are very optimistic that these will materialize. I'll tell you a little bit about the additional functions that the debt office is now expected to perform as a result of these reforms. I have revised or updated the functional distribution metrics that I showed you during our last interaction. And finally, an important development that we were already experimenting with, but now the plan is to document this process for setting of auction targets and executing the government securities auctions. Next slide, please. So these are some of the additional functions we did not have, although the budget always had an embedded borrowing plan, but we never issued a document by the name of annual borrowing plan. In future, hopefully you will see that the debt office will issue an annual borrowing plan, hopefully along with the budget documents. So that will provide you with a basis of what to expect over the next financial year. And then a backward looking annual debt review at the end of the financial year, which evaluates how much of the targets were achieved and what were the areas where things went differently than initially planned. The raising of domestic debt and setting the guidelines for the borrowing instruments of the saving center Uh, we are very optimistic that these functions will be now formally assigned to the debt office. Over the past few months, debt office was exercising a lot of influence in raising of domestic debt through government securities auctions, but we are hoping that this is going to be formalized now by assigning this function to the debt office. And the raising of external commercial debt also. So Eurobonds and international bank loans or any other commercial borrowing instrument, we are expecting that it would become a function to be performed by the debt office in future. Until now, this was being performed by the external finance wing in the Ministry of Finance. And then a regular issuance of debt bulletin, which is supposed to contain the key figures relating to the stock of debt as well as the flows or other sources of increase in debt over the period under consideration. We already issue a risk indicators report, but this debt bulletin is supposed to be more comprehensive. So hopefully we will be issue the first bulletin by the end of this financial year. And then of course we will request you for your feedback as to how comprehensive it is and what additions or deletions can be made to it. Another important function that is going to be assigned formally to the debt office is management of debt records and databases. Until now, the debt office was mostly in a coordination role, but that's going to change now. Hopefully, debt office will become the custodian for all the debt records. And even if any other agencies are maintaining the debt records, it will be done under the supervision, oversight of the debt office. Investor relations is a relatively new development, but now it's going to be formally assigned to be to the debt office as a function that has to be performed on an ongoing basis. It obviously means reaching out to the market participants, sharing new ideas, getting new ideas from them, getting their feedback on what is going right, what is going wrong, responding to their queries. So hopefully that office will play a proactive role in this area also. Next slide. This is the revised matrix. You can see in the execution column, now domestic borrowing is primarily something that the debt office will be taking a lead in, supported by the budget wing, of course. Saving center, although would be executing the saving schemes, but the debt office will be in charge of the policy making to the extent of the borrowing instruments. In terms of multilateral and bilateral loans, the debt office's role is going to be much stronger, although it will still be more of target setting and monitoring. The Economic Affairs Division is expected to continue as the face of the government to the extent of these loans, but the debt office is definitely going to play a stronger role in setting these targets and monitoring and facilitating. And finally, the Eurobonds and bank loans are now going to hopefully become a function to be performed by the debt office instead of external finance wing. Next slide, please. So these are the key points of the process that we are very optimistic will be in place very soon, will be in place formally. I would like to claim that to a great extent, we have been complying with this process already over the past few months, but now hopefully it is going to be formally approved and implemented. So the key principles are that the 3-month rolling auction targets that we announced should not be revised too frequently. And if that happens, then it has to have a strong justification. And volume-based limits are going to be introduced at three levels. Firstly, at the level of a single auction, the issuance should not be more or less than the auction target by 50% of the target. Over a quarter, if you look at all the auctions combined, the aggregate issuance should be within 25% of the auction targets. And for the full year, the aggregate issuance should be within 10% of the auction targets. Exceptions should be rare and have to be explained and justified. So we are hoping that once this process is formally implemented, it will provide a lot of discipline to the conduct of government securities auctions. Uh, and that is going to make many of you happy, those of you who invest in government securities on a regular basis, because you don't like too much uncertainty when it comes to the execution of these auctions. So thank you very much. That brings me to the end of the presentation, and I would welcome your comments and your questions. So let's have a quick session for question and answers.
Thank you, Varai Saab. I'm extremely grateful to you for bringing us so many details and clarity about the various very important aspects of the public debt management. For the audience, we will now be opening the Q&A, and given the format, we have 100 plus participants. We would request you to kindly write your questions in the chat box, and we will try to pick those questions as much as possible. Before we let the audience raise their questions, I would like to request Varai to just shed more light on the impact of COVID on the finances for this year and next, in the perspective that we already know that FBR was falling short of its tax collection target, and with this lockdown, which looks like may extend or would run probably or affect the overall economic activity. Along with that, the support program announced by the government would result in fiscal pressures. So how does this going to reflect in the financials? I will just put up this slide which showed the overall fiscal deficit numbers. So how would it likely to affect this year and next year as well? Similarly, again, in addition to that, you have mentioned about privatization and external grants and borrowings. So this number has been revised down as well. So if you could shed light to what extent it has materialized until now, and for the current year, does it incorporate the impact of the World Bank, IMF, and ADB that have announced to support the economy? And again, in the whole context, how do you see the situation going forward? If do you expect this impact of COVID on lockdown, if it gets extended, how sensitive are our debt numbers, and what is the government plan on that side? So in the meantime, we will be looking at the questions from the chat box, and would leave you with this question.
So I would say that under the base case scenario, the federal government is not expecting a very large increase in its deficit in the current year or the next. As I told you earlier also, there were certain factors that went in favor of the federal government also during this year. The profits from the central bank had been significantly underestimated. So the was estimated in the budget. And this trend is expected to continue for a few years, because right now we have a lot of debt, which public debt, which is owed to the central bank. So we are going to make huge interest payments to central bank over the next few years as well. So that was a mitigating factor. If Corona had not happened, we actually expected our deficit to go down by 300 to 400 billion. But our more recent estimates have now converged back to the original estimate of 36 to 3700. The package that the government has announced, we believe that the actual payouts during the current financial year due to this crisis would be in the range of 300 to 400 billion. But some of it would be financed through some savings on the development side. So the development expenditure is going to be less. So some of the additional expenditure will be met by diverting some funds from the development budget. And as you said, although the FBR's revenue shortfall is going to be much higher, but since federal government only gets around 40% of what FBR collects, so the shortfall that the federal is going to face is going to be offset almost completely by the higher central bank profit and lower interest expenditure. We had budgeted around 2,900 billion as interest expenditure, but the actual number is projected to be less than 2,700. So there is a significant uh, relief on the side of interest expenditure also. For the next year, the FBR will start with a much lower base than what had been initially anticipated, but now the government is hoping to raise more from petroleum levy, because the oil prices have significantly come down, and the base case scenario suggests that these will remain lower than what they were until a few months ago. So that will provide room for the federal government to collect more. And the good thing about petroleum levy is that it is not shared. All of it comes to the federal government. And on top of all these mitigating factors, we maintain a significant cash balance also with the central bank. So even if the budget deficit overshoots a little bit, we don't necessarily need to go out in the market and borrow to finance it. So the view of the debt office is that from a financing perspective, the federal government is doing all right, but we do think that the provinces will face some pressure, although they also had some buffers on their part also, because until 1 or 2 months ago, the provinces were expected to throw large fiscal surpluses over the next few years, including the current year. So now what we expect is that probably in the current financial years, the provinces will not be able to come up with surpluses. But over the next few years, the earlier projections were so large that even the revised projections would still project decent provincial surpluses, although much lower than before, but still decent. So I think in the current financial year, it's going to be a bit more challenging for the provinces. The federal government is relatively in a comfortable situation. As for the longer term projections, we do feel that the fiscal deficit reduction path that we were envisaging until 1 or 2 months ago will now change, and it will not be easy to bring down the fiscal deficits. So, over the next few years, we right now foresee that the federal deficit will continue to be in the range of 3,000 to 3,500 billion. Uh, but it's too early to make a definitive comment because the entire budgeting exercise is kind of uh, being redone right now. So the budget wing is working on that. Hopefully, by the time of our next interaction, I will be able to comment in more detail on what the fiscal deficit projections are for the next few years. Thank you.
Okay. So in relation to the fiscal deficit for this year, you mentioned about, again, the share of provinces will be absorbed by the provinces in terms of the pressure on their finances. But wouldn't
Yeah.
it reflect back in terms of the borrowing requirement or the fiscal surplus or provincial
Actually,
surplus?
yeah. So the provinces were expected to generate a surplus in the range of 3 to 400 billion, which the debt office now feels is quite unlikely. But we don't think that provinces would be incurring very large deficits. Even if
Okay.
there are deficits, these would not be very big. And in future, the previous projections were projecting very large provincial surpluses. So even in the revised projections, we feel there would still be some surpluses, although much lower than before. So even the provinces may not need to borrow very aggressively from the market. But this is the base case scenario, of course. We are not projecting lockdowns for a very long period. We are hoping that the economic activity will, you know, resume sooner than later and will gradually pick up, hopefully, as this virus we're hoping will not, you know, spread on a very large scale in Pakistan.
Okay. So the lockdown, even if extended by 1 month, can have huge implications. So can I ask what kind of revenue projections currently are priced in?
I
Uh,
think there's talk
yeah.
of 4,000 billion now, but the precise number is being negotiated with IMF, between the budget wing and the IMF right now. So once it is finalized, it will become public. But I think there is talk of FBR collecting in the range of 4 trillion, which is much lower than the initial target. We began the year with a target of 5,500.
Okay. And in terms of expenditure, what amount of current expenditure is currently incorporated?
I think in the range of 3 to 400 billion for the federal. I'm not very sure about the provinces, but since the provinces were hoping to generate surpluses, so and they can also divert some of their development expenditure, so financing of the additional current expenditure should not be a big problem. The federal is also diverting some of the development expenditure, maybe 100 to 200 billion worth of diversion from the development side. And as I said, the windfall from the central bank profits and a lower interest expenditure. So all of these factors combined, uh, the federal deficit is still being projected to be in the same range of 36 to 3,700.
Okay. So coming towards the financing part, you mentioned about the privatization and external flows. So to what extent they have materialized as per the latest number, and what is expected going forward?
Yeah, there was 5 billion US dollar worth of friendly country deposits until last year that we expected would be rolled over and would also be converted into public debt. So at the beginning of the year, at an exchange rate of 150 rupees to a US dollar, we were expecting to raise 750 billion from that source. Although the deposits have been rolled over, but have not been converted into public debt as yet. So we were not able to get that money for the purposes of budgetary financing. And the second major loss was on account of Eurobonds. We had anticipated an inflow of 3 billion US dollars, which was equivalent to 450 billion. But that didn't happen. Initially, when things were going well, the government felt it was not necessary to go and issue Eurobonds when you're getting decent financing at relatively concessional rates from multilaterals, and the budget deficit is also expected to be lower. As I told you, until 1 or 2 months ago, we were expecting the budget deficit to be now the situation in the international markets has become more challenging, so I don't think we'll be able to issue any euro bonds during the remaining part of this financial year. So these two factors combined, I think, add up to around 1200 billion, which is practically the shortfall that we have faced. We were initially targeting close to 2400 from external sources, but now we're looking at only 1200. Out of this, half has already been realized, and the remaining half is already committed. Mainly, it is going to come mainly from the multilaterals, IMF, World Bank, and Asian Development Bank, the major partners. We have not really incorporated any additional financing that may come due to this recent crisis. Right now, we are pretty much projecting what was already expected from these institutions. So if there is a significant amount of additional financing as a result of the crisis, then that will improve the inflows from the external sources.
Okay, thank you. So about the financing of fiscal deficit, there are a few questions. I will try to club them together about the Sukuk issuance. So
Mm,
that has not been very much there until now, and few auctions have been announced.
yeah.
So what has been the reason why the Sukuk issuance has been so dried up? And in this similar connection, can you shed some light on the energy Sukuk as well, which was planned several months ago? But if you could shed more light, what is the plan now?
I think the fact that the debt management operations were rather fragmented and the responsibility for issuance of domestic sukuk was for some reason given to the external finance wing, which has the primary responsibility for external financing. So I think probably the external finance wing until recently was more focused on raising external financing, and whatever assets were available for structuring the sukuk issues, they were planning to use them for Sharia compliant euro sukuk. Uh, but I think it it was it was a mistake. It was a serious mistake on our part not to ensure a regular issuance of domestic sukuk. But now the government has realized it, so we have received the approval of a decent sized domestic sukuk now, and we are now committed to build a pipeline. By the time this sukuk is fully issued, we are hoping maybe sometime in the next financial year when this sukuk will the issuance of the sukuk will be complete. We should be able to build a pipeline by then. So we have a few months to plan for that. and we're committed to do that. So hopefully in future, you will see a regular issuance of domestic sukuk. And your question regarding energy sukuk, it has been delayed a lot, partly initially because of certain restrictions imposed under the IMF program on issuance of guarantees, but that took a few months to be resolved. But then later on, the government felt that a transparent competitive process was not followed for the issuance of sukuk. So the transaction was initially the power holding company had negotiated, although it was a sukuk, but practically it was like a negotiated loan with a consortium of banks. So now the government has decided to go for a very, very transparent auction process under the oversight of Securities and Exchange Commission and in close partnership with the Pakistan Stock Exchange, and enabling not only the financial institutions but all kinds of non-financial institutions and corporates and even individuals to participate. I think the minimum bid size for individuals is going to be 100,000 rupees only, just like T-bills and bonds. I think you will see an advertisement in the newspapers either tomorrow or the day after. So the investors will have almost 2 weeks to open their accounts with the CDC, because this is going to be a scriptless issue. You will get electronic statements uh, for these. So we are very optimistic that this is going to be a very transparent transaction now, and it will set the stage for a series of bond issuances by the state-owned entities. Thank you.
Okay. So now a couple of questions with regards to national savings. First question is, what is the policy for change in NSS rates? And the second is that what is the thought behind CDNS policy making to debt office, and are there any regulatory changes on the cards about it?
The current policy is that the rates are revised every 2 months, and the rule is that for every savings certificate, you offer 95% of the weighted average yield of the comparable bond in the most recent auction. So when the rates of saving schemes are up for revision, uh, the most recent auction of comparable bonds becomes the benchmark. T-bills and bonds, it becomes the benchmark, and the yields offered by the savings instruments are the revised yields are equal to 95% of the comparable bond or treasury bill yield. So that's the rule until now. Um, there is talk of some new savings instruments for overseas Pakistanis. Hopefully, you will get more details through uh, the newspapers and through the savings centers notifications over the next few weeks. Um, as far as the regulatory regime of the savings center is concerned, you are right. There are concerns that this is not a very well regulated institution. And as per the information of debt office, the government has been deliberating as to what is the best way of regulating this institution more effectively than before. Um, our understanding is that the government is going to develop a stronger regulatory framework through some new rules that are going to be introduced. we don't foresee the state bank or the Securities and Exchange Commission directly regulating the saving center in the near future. That's my information, but to be honest, I'm not fully aware of the most recent status of how this saving center is going to be regulated.
So one question relates to the circular debt. How does it impact the overall the debt management department? Because it looks like an unfunded debt.
Circular, I think until now, the idea behind forming a company which borrows on the back of government guarantee and pays off the arrears of the power sector, I think the idea has run its course, because now that the power sector's problems have not been resolved and the circular debt has accumulated to such high levels, that now there is talk of government taking over this debt. So we're already in negotiation with the World Bank over a plan to gradually take over this debt. Um, I think over the next few years, you will see um, a significant portion of the circular debt being converted into public debt, which essentially means that the power holding company and the CPPA will be able to retire their arrears or the outstanding debt. And for that purposes, funds will be provided by the federal government. So this is going to add to the federal deficits a little bit every year. But at the same time, we're hoping that with the much needed improvements in the energy policy and other efficiency programs, the buildup of circular debt will also slow down drastically. So we are just keeping our fingers crossed. The debt office is all, of course, goes without saying, is very concerned about the potential impact of circular debt on fiscal deficit and the debt levels. Uh, but that's a very complicated issue, and the Ministry of Finance cannot deal with it on its own until some, effective reform of the power sector takes place, which will require better oversight by the regulatory institutions and better energy policies and all of that. So I think this is a complicated area. I don't think I have a comprehensive reply, but yes, we are concerned, and the government has decided to take over a significant portion of this debt over the next few years gradually. But we are also hoping that the power division will also be able to improve the efficiency and the policy so that the buildup of circular debt stops.
Okay. So there is one question about single treasury account, how it is, how the progress is moving forward. If you can share an update about it.
To be honest, the budget wing is mainly dealing with it. I shared my understanding of the single treasury account with you during our last conversation. I don't think a lot of progress has taken place because, and in recent months, mainly because of this new emergent situation that has come up. But the idea that, as per the understanding of debt office, is that all the state-owned entities which depend on the government for budgetary support, their accounts should be consolidated with the federal government's account. So the existing treasury single account its scope needs to expand and include certain entities which are currently out of its scope. And then there is the concept of zero balance accounts. Based on their budgets, you allow all those entities to spend a certain amount during the financial year or during the quarter. But it's like a spending power. The account doesn't have any actual balance, but there is a certain amount of spending power attached. So state or entity can spend the money, and the relevant bank, national bank or whatever, will then be able to recoup or recover that money from the treasury single account maintained by the government. So that's the idea, having a central account with lots of sub accounts with zero balances and spending power. So there would be no provision for money lying idle in commercial bank accounts. All the money will lie in the treasury single account already being maintained with the central bank. So we are hoping, the debt office on its part is hoping that it will improve the cash balance of the government by 100 to 200 billion PKR, but these are wild estimates, to be honest. We can come up with a precise estimate only when the census is complete. And we are told by the budget wing that there are thousands of accounts which need to be sorted out. So I think this exercise is going to take time, because now in the wake of this recent economic crisis, setting up of the treasury single account doesn't seem to be that urgent a priority. But let's hope that it happens sooner rather than later. The debt office is keeping its fingers crossed. We are hoping that our cash balances will improve in the range of 100 to 200 billion PKR as a result.
Okay. One question which, sorry, my fault. I couldn't ask the complete question, about the Sukuk. So one part of question was why restrict it to 75 billion per month and three issues and not doing 225 billion in one go?
As I told you, our strategy in recent months has been to go for a regular issuance. We want to avoid situations in which we issue too much in a single auction and then nothing at all during the remaining months. Our borrowing needs right now, as I told you, are not very high. As I showed you the numbers, we have already borrowed most of the money we needed. On top of that, we have a huge cash buffer which we can draw upon. Uh, and then we have this strategy to have a regular issuance program so that there is more competition in the market. Um, and by the time the issuance of this Sukuk is complete, we are hoping to build a pipeline so that the regular issuance in the range of 50 to 75 billion a month continues. So all of these factors combined, we didn't feel the need to go out and hold a very large auction. Thank you.
Okay, I think I have covered most of the questions, given we have already exceeded our intended time by 15 minutes. One last comment from the questions that I would share is it is difficult to find domestic and foreign debt redemption profile. It is suggested that disclosures regarding redemptions may also be included in regular publications of TPCO.
Yeah, that's a very valid point, and hopefully the debt bulletin that I mentioned I think we should be able to publish the first debt bulletin by the end of this financial year. Hopefully, most of your concerns will be addressed. But if any of the concerns remain and you tell us that you would want to have more details in the bulletin, we would be more than happy to provide those details.
Okay, thank you. I have tried to cover most of the questions. My apologies to audiences whose questions I have not been able to ask due to time limitations. In the end, I would like to thank Mr. Baraich for very extensive discussion and really good guidance for the market participants. I really appreciate, I think, very unusual times for the country, for the economy, in terms of very unusual times that we are seeing risk to fiscal deficit, we are seeing risk to the overall economic growth, yet we are looking at probably lower inflation and probably relatively stable exchange rate, hopefully, given the relatively comfortable external outlook. Thoughts about it you already shared as well. So with that note, I would like to thank all the audiences, my colleagues in the CFA board, the staff and management of CFA Society, who has worked hard to bring this event to you. And I think we cannot do the memento ceremony that we usually do, but we really appreciate Mr. Barai. Thank you very much for being
Thanks
here.
to you for making it possible, and thanks to all the participants for making the time. Thank you very much. We're
Thank you
really
very much.
honored. Thank you.
So this presentation, right, if with your permission, can we announce that would be available?
Of course,
Can we
of course,
share it?
of course.
So this would be available through our website, or you can email at info@cfasocietypakistan.org to request a copy of this presentation as well. Thank you very much.
Perfect. Thank you.